I don't think anyone looked at Hong Kong and said the biggest problem here is not enough banks. It's a small place, and there's a lot of like quite large dominant financial institutions. And the other thing is, if you look at Hong Kong relative to somewhere like the Philippines or Indonesia, HSBC is a global institution, but it's based here. So actually the quality of banking services is relatively high. But I think what we've seen in the domestic market is there are still gaps. And I don't think that any of the virtual banks, their end game is to dominate the Hong Kong consumer market. I mean, you can see that Alibaba is already looking at Singapore. There's a number of other jurisdictions people are looking at, like Taiwan and Malaysia. My guess is that most of their business plan starts here, but involves trying to become a broader Asia player. And I think you see that in Europe as well. Like one single European country is not enough for something like a Revolut to become really interesting. But they start in one country and they try to take the technology they build and scale. And I think that for them, actually, you know, what's important is that they can create good technology, understand the consumer set, and take that to other markets with similar consumers. And that's the hard bit. Because, you know, Hong Kong people are very different to people in Indonesia, very different to people in Taiwan. So my guess is that they're going to be razor focused on trying to find like what are the key pain points that are felt not only here but by a lot of people, and that's going to be the challenge, I think. I think in the short term they're not going to go for revenue. So what you've seen as the playbook emerge is generally to focus on the services that banks don't make money from and don't particularly focus on, and to aggressively pitch them to consumers the most open-minded possible. So, you know, banks tend to make money on foreign exchange, investments, loans. You know, mortgages are very profitable for banks in Hong Kong. I don't think that that's the area that virtual banks will go after. I think what they'll try to do is go for services that, as you said with your daughter, is that she's used to paying for something, and the virtual banks will come in and say, I will now give this for free, right? And I think what you're seeing is the very natural reaction of these big guys is to prepare themselves from that. But I don't think that, you know, in most markets, I don't think the virtual banks have started to really hurt revenue yet. They're getting lots of users, but they're not going after the core activities that drive the balance sheet of a bank. So even the digital banks in the UK, they tend not to be the primary bank for something like someone's life savings, right? And that's what makes a big bank like HSBC so big. What they're doing is they're doing a lot of expenses, and some of them are starting to do credit, like loans. I think that you'll see a lot of banks in Hong Kong the virtual banks will go after savings first, because for young people it's hard to save money, and I think that they feel in many cases left behind, like a lot of the technology is not built for them. But I wouldn't say at the highest level of HSBC, their number one priority is to get the saving accounts of 19-year-olds in Hong Kong. So I don't think it's a short-term thing, but, you know, if every year 1% of the market, you know, year on year, you know, after 10 years it starts to become quite a big thing, and it starts to chip away. But I mean, you know, to put it this way, like, I think the virtual banks are putting in like $100 million each. This is no money at all to someone like an HSBC, right? Standard Chartered have got their own player, a very strong player, right? So I don't think that on day one there's going to be panic or like, you know, a quarterly earnings call where the CEO says that, you know, terrible results. I can't see it, but I can see them preparing themselves for like a long-term gradual erosion.